Credit scores underpin our financial lives. Or at least, that's what a number of people seem to think, and it's certainly a topic that I've seen discussed online over and over again. So in this video, I want to share with you why I don't really care about credit scores, and a few reasons why I don't think you should either. But before we get started, my name is Chaz, and I'm the Risk On Investor. And this channel is all about investing and personal finance, so if those are topics that interest you, hit the like button and the subscribe button down below for more content in the future. Before we kick off, I just want to share a quick disclaimer with you, and that's that I'm based in the UK. Now, a lot of content around credit scores seems to be very US centric, and whilst there is a lot of crossover with how personal finance works between the UK and the US, I think credit scores is an area of distinct difference. So if you're from the US and watching this video, just bear that in mind. And if you're in the UK and you've watched some of these videos from American people, then just bear that in mind as well. So firstly, before we dive into why I don't really think credit scores are a particularly good idea, I just want to outline what a credit score is and why some people consider it important. So it really boils down to one simple thing, and that's that a credit score is a way for a lender to assess you with just one pure metric. Credit scores generally take the form of a number. The number can really vary, or the scale of the number can vary. So for example, a popular credit union is Experian, and they will give you a credit score between 0 and 999. Depending on then what that score is, you'll generally be given a rating. So again, using Experian as an example, they have 5 categories, and they'll rate you from very poor to excellent, depending on your score. And the idea is that that score and that rating will give lenders an idea about how reliable you are as a borrower, and therefore if you've got a higher score, you're more likely to be approved for credit, whether that be for a loan for a new car, or an unsecured personal loan, or maybe even a new mortgage. And so the proposition here is that if you have a low score, you want to find out, because that means that banks or other lenders are going to consider you risky to lend to, and therefore they might not lend to you, or they might lend to you at a higher interest rate, so it costs you more money in the long term. So I just want to share 3 reasons why I don't think credit scores are the be all and end all and really that important. So the first reason why I don't really care about credit scores is that there's no unifying scoring system. So there are 3 main credit agencies: Experian, Equifax and TransUnion, and you can go and you can check your credit scores with each of those providers, and what you'll see is that you'll likely get a different score with each one. The number banding as well will be different with each credit union, and so you can't make an apples to apples comparison. Now, what people are generally talking about when they're talking about credit scores, if you see a US based video, is they're often talking about a score produced by a company called FICO. So FICO have made it their business to effectively collect some data about you and support lenders with information about you when they're assessing you for credit. And so FICO have all kinds of different scores. So for example, a mortgage provider might buy a particular FICO score from FICO, whereas someone who's lending for an unsecured personal loan might buy a different score rating from FICO. And these scores are weighted based on different aspects of your credit files. But all 3 of the credit unions provide information to FICO to build up that score. Now, the reason that seems to be so important in US personal finance culture is that FICO score seems to be quite a major component for lenders' decisions. And so therefore, if you can check your own personal credit scores with those 3 credit unions, then there's a good chance you can improve your FICO score and a good chance that you can improve your eligibility for borrowing. Now, the big difference here is that FICO scores don't seem to really be that important in the UK. So FICO does offer a suite of products in the UK, and I'm sure that lenders will purchase that data at some point and make it part of their decision, but each lender is going to assess you on various metrics, and your credit score is certainly not the central metric there. And I think that's borne out with the way that some lenders will lend to certain people, whereas you can go to another lender and they might not want to lend to you at all. And so that indicates that they're all using different metrics, and most will be using their own in-house risk system, where they'll collect their own data on you, and those credit scores will just make up a small part of that. So they're assessing you on a very wide range of topics, and so a credit score really isn't at the end of the day going to be a make or break item in that assessment. So the second problem is that scores vary, not just in the actual score, but how the score is calculated, and that means you can't compare them as sort of an apples to apples comparison. Now, you've likely experienced this if you've signed up already to all 3 of the credit unions, looked at your score, and you'll probably have noticed that it varies depending on which one you look at. Now, there's a couple of reasons for that. Now, I've touched on one earlier, and that's that they don't all use the same band of numbers. So if they all used a number, say, between 0 and 10, none of them do, but let's just say they all did, then it'd be much easier to compare your score across the board across 3. So say you are an 8 out of 10 in 2 of them and a 3 out of 10 in the other one, you can look at why there's a big discrepancy between the 3 out of 10 and the 8 out of 10. So as I said, it's not just that the scores can be different, but how they're calculated can be different. So each credit union might give different weights to different aspects of your credit file to generate the score. So for example, one might penalise missed payments more than another, or another might say that injunctions are really, really bad, whereas another one might be a little bit more lenient towards it. And all those decisions and weightings within their calculations will affect your final score. And that's partly why your final score will vary across each of the unions. Now, having said that, there are some useful bits to credit scores. When you look at them, if you look at them across all 3 of the unions there, if you do find one that's wildly different from the others, then it might be because there's a mistake on your credit file. Now, a particularly common one here in the UK might be to do with your registered electoral roll address, as that's an easy fix. If you spot that that's a problem because there's a low score, then it's flagging up that there's something wrong there, and you can go and just make sure that that's correct so that there's no issues with lenders in the future, because that might be a bit of data that they're pulling on as well. So if they're pulling on incorrect data, that's obviously not going to be good for any applications for credit that you're making. And so you can see there that the scores can be a rough indicator of what's on your underlying credit file, but it means that the actual score number itself just isn't that important. Now, the third problem that I have with credit scores is that the credit unions themselves I'm not sure can necessarily be trusted here. So as an example for this, recently in the US, 2 of the 3 major credit unions, so Equifax and TransUnion, have been stung with lawsuits. And the key takeaways really in those lawsuits were twofold. The first was that they were accused of overstating the importance of credit scores so that they could sell products to consumers. And so here we're seeing that the actual credit score rating system itself is being promoted by these credit unions, saying it's the be-all and end-all, and that was found to not really be true in the court of law, and therefore those companies were fined for that. And the reason they want to overstate the importance of those credit scores is because they can then sell you some kind of subscription service, whether it be a service that monitors your score or some kind of course to help you boost your score to make it more impressive for lenders. It turns out that neither of those things were particularly important. And the second part of the case that's really the important takeaway here, it was found that those unions were giving different score data to lenders as they were to retail clients who were signing up to check their scores. So that means that the score you're checking anyway and putting all this focus into improving isn't actually the data that's going to the lender anyway. And so as part of those cases, those credit unions were fined to the tune of around $23 million US. And so my takeaway from that was that why on earth should I be interested in a number score if really that number isn't even what's being provided to the lenders, who at the end of the day are making the decision on whether they want to lend to me or not. So if I don't care about the actual credit score, what do I care about? Is there anything underlying there that I think is important? So whilst I feel like I've been slightly scathing of credit scores here in this video, there is a lot of good information that can come from them. So I've touched on it as well earlier in this video. Now, if you sign up with one of these credit unions to look at your score and you find out that your score is actually really low, that could be a sign of other things. After all, these credit scores aren't just whipped up out of thin air, they're based on your credit file, which is the underlying data that's then weighted to produce those scores. And so if you've got a really bad score and you don't think you've really done anything out of the ordinary, it's likely that there's something on your credit file that's penalising you. Now, I touched on before, there's often some simple ones here in the UK, such as your electoral roll information, but there might be more important ones. Maybe you've been incorrectly assigned with some kind of default on a loan that you hadn't taken out, but that was incorrectly assigned to your credit file. Or it could be a way to spot some fraud. If someone is taking out loans under your information and your name, this is a way to keep an eye on that, and just keep an eye on your personal data. And so these credit unions can have a good role in that, in helping you keep abreast of what's going on in your financial situation, because some of that underlying data that's on your credit file is data that's going to be assessed by lenders when they're looking at you as an individual and whether they want to lend to you. And so if someone tries to tell you that credit scores are the be-all and end-all of whether you're going to be able to borrow money, just remember that income is probably the most important part of a lender's decision when they're making a decision on whether they want to lend to you, whether it be a mortgage or an unsecured loan. And your income is not part of your credit file, and your credit file is what's used to generate your score. And that's why often the key metrics for lending, especially for things like mortgages, is the affordability of the repayments based on your income, not necessarily whether you've had any injunctions or defaults in the past, although that will make an impact. It's your income that's the real driver. And that's data that credit unions don't have about you on credit files and therefore isn't included in your credit score. So have I persuaded you? Do you now agree that the actual credit score itself isn't that important of a metric, but it's more the underlying data that it tells you about? Let me know in the comments down below. I'd love to hear your thoughts, especially if you're from a country that's not in the UK, because the situation may be different there. I'd love to hear your experiences. In the meantime, the YouTube algorithm thinks you'll like this video next. Give it a watch and see how well the algorithm knows you. But until next time, thanks very much for watching.